about what is OTC, OTC simplified process, OTC and SAP, OTC SAP accounting entries, and integration points. Let's go to the first slide. So what is OTC? OTC stands for order to cash. OTC stands for order to cash. When I hear this term, I associate it to the following keywords or phrases: order to cash, or OTC, or O2C. It relates to customer, shopping, buying stuff or a service, accounts receivable, perspective of the company or business. It is selling something. Now let's talk about the following scenarios. You go to a cafe and buy yourself a cup of coffee. You call a moving truck service to help move your furniture to a new location. You place an order online for a new mechanical keyboard. All the scenarios above show an exchange of a product and or a service between you and a business. You get the service or product that you asked for. In turn, you pay the business for the service or product. OTC simplified process. A simple way of looking at OTC is to consider the 4 steps below: pre-sales, ordering process, order fulfillment, billing. Step description. Pre-sales. Anything before an actual order is created. This is typically where discussion happens between the customer and the business. For example, a customer would ask about the price of a product or would need a bulk of that product to be provided monthly. Order processing. Creation of the sales order commitment of the business to provide the requested product or service. And then order fulfillment. The business will fulfill their commitment to the customer by providing their product or service. For example, the business will deliver the product to the customer. And then comes the billing. At this point, the customer should pay for the product or service. The customer is provided with the breakdown of the costs and a payment happens. OTC and SAP. Now that we have an idea of the 4 steps, let's consider those 4 steps as scopes. This time we will dive deeper into the OTC process steps in SAP and try to categorize each item into the 4 steps scopes we discussed earlier. If we refer to the table below, you will notice that there are several OTC processes steps and they are categorized into the 4 steps we discussed earlier. Focus on the second column or scope column. OTC processes or steps. First one is inquiry. This comes under pre-sales. Then quotation. This also comes under pre-sales. Contract. This will be coming under pre-sales. And then comes the sales order. It comes under the scope order processing. And then comes delivery. This also comes under order fulfillment. And then comes the post goods issue or PGI in short form. This will also be coming under the order fulfillment. And the last one, shipment and billing. These two comes under order fulfillment. Usually in billing process, customer will be paying and the business will be receiving the money. Now let us go through each of the OTC process steps to get a quick overview of what each step is trying to accomplish. Pre-sales. In pre-sales process, inquiry, quotation and contract, all the discussion related to this comes under this pre-sales process. Then moving on to the next process, it is order process. In this, sales order will be placed. Next will be order fulfillment. In this process, delivery, post goods issue, shipment will be occurring. And the final process is billing, in which customer pays the business. Inquiry. A potential customer asks about a product or service from the business. How much would this product or service cost me? Quotation. After obtaining details from the potential customer, the business would provide an answer in the form of a quotation. The quotation would include the product or service requested and a corresponding price. Other necessary details may be included. The product will cost USD 100 for a pack of 15. This is an example, guys. Contract. The potential customer means the potential customer mentions that the product will be ordered each month. The customer needs the product monthly and asks if the business can provide the product monthly for 5 months. The business is okay with that approach. At this point, a formal agreement is established between the customer and the business in the form of a contract. I need the product to be provided monthly for 5 months, like that. Then comes the sales order. An order will now be created in reference to the quotation or the contract. This means the business is committed to providing the product to the customer or accounting entries yet. The sales order will typically have the following details: info about the product or service, pricing information, delivery information, example dates and quantities, etc. Shipment information, example route, billing information, example payment and risk. Then comes the delivery. In this process, from the sales order, a delivery occurs to trigger and give the product to the customer. It will facilitate activities such as picking, that means selecting or getting the requested product in the agreed quantity. Then comes the packing. Packing includes the packing the requested product. And then comes the arrangement of transport or shipment planning, etc. Then comes the post goods issue, in short PGI. When goods are moved as a part of the process to bring the product to the customer, a PGI is the item has or inventory and will be given to the customer. In a way, this also moves the ownership of the product from the business to the customer. Because of this, a PGI would then trigger a log of this material movement so that the business is aware of their inventory. In addition, this movement will trigger accounting entries. Shipment. To bring or transport the product to the customer, a shipment occurs. Billing. When the product reaches the customer, billing occurs. Usually, businesses wait for the customer to receive the product before billing. There are also businesses who bill the customer before the product reaches them. It would depend on the processes followed by the business. The billing would trigger accounting entries, and this highlights that the customer needs to pay for the product or service. Customer payment or receipt of money. This happens when a customer finally pays for the product or service. A payment would also trigger accounting entries. Pre-sales. For example, you can skip the pre-sales. That means which I have earlier mentioned by serial numbers 1, 2, 3 and go directly to the order processing by form of a sales order, which is a serial number 4. This happens when the customer doesn't need to ask pricing details from the business. Typically, the customer and the pricing. Shipment. Another example is that shipment, which is serial number 7, can be skipped if the product or service is directly provided to the customer. Consider the scenario where you buy yourself a pair of shoes and you have it with you immediately as you walk out of the shoe store. Integration points. In some cases, there is a confusion when it comes to the integration points. When we talk about the overall order to cash process, it can involve several teams. For example, sales and distribution, finance, logistics, etc. Overall, the whole process is mainly sales and distribution with the support of finance. There are, of course, certain areas where finance would be best suited to check on. For example, payments or accounting entries. Ideally, it is also good to collaborate with both and even other concerned teams. The below table shows the integration points for SD and FI. Here comes the O2C processes. In this O2C process, these are all the processes that will include, like inquiry, quotation, sales order, delivery, post goods issue, shipment, billing, customer payment. Here comes up to delivery, there is no need of accounting entry and there is no need of accounting document. Scope. For the inquiry, it comes under pre-sales as I discussed earlier. Quotation, this will also comes under pre-sales. Contract, this will also comes under pre-sales. And up to this delivery, the whole process comes under SD segment of the SAP. From post goods issue onwards, it comes under SD plus FI. Here from post goods issue process, We need accounting entry. We need an accounting document. Scope comes under order fulfillment. And this comes under the segment SD plus FI. Shipment. Shipment also needs an accounting entry, accounting document. No need of accounting document. But scope comes under order fulfillment. This also comes under SD plus FI. Billing. Billing needs accounting entry. That's obvious. Accounting document. And scope comes under billing. This also comes under SD plus FI. Payment or receipt of the money. Accounting entry needed, accounting document needed, scope comes under billing, and this comes under FI segment. Here comes a diagram. Here comes the HR payroll, raw materials, goods receipt. These all are connected here at the chart of accounts, general ledger postings. And here comes, which are in green, these all are related to the customer processes. Related to customer, like sales order will be placed by customer. We'll be delivering the goods to the customer. Like we'll first create delivery. Customer invoice, we'll be producing invoice to the customer. We'll be performing billing, record revenue and receivables. Finished goods, inventory checking. These all be related to the customer. Like account receivable subledger. And which are colored in blue, this comes under fixed asset subledger, like receipt of fixed asset, purchase order. This belongs to the vendors, like accounts payable subledger, payments, vendor invoice, goods receipt, expense items and inventory, like that. This is it, guys. Next, the below shows the corresponding SAP transaction codes of per step, OTC process steps. Inquiry, transaction code is VA11, table VBAK. For the quotation, we use transaction code VA21. Table is VBAK. Contract, for contract we use code VA41 and the table is 01 and the table is VBAK. Delivery use T code VL01N and the table is LIKP. Post goods issue, we use transaction VL01N and table is LIKP. Shipment, for shipment we use T code VT01N and the table is VTTK. Billing, for billing we use T code VF01 and table BKPF. Customer payment or receipt of money, you can use F-28, FB50, as you are familiar with this FB50, and FF_5 and the table is BKPF. That's it, guys. Yeah. Hope you all understand.